6 months from today, America could wake up to its biggest financial disaster since 2008. The headlines will scream. Markets in free fall. Dow plunges 3,000 points in a day. Bank doors locked. Credit frozen. Millions of jobs gone. This isn't a dystopian movie plot. This is a real scenario unfolding quietly behind the scenes right now. The trigger won't be a housing bubble. It won't be a virus. It won't even be Wall Street greed. This time, the spark could come from something most people overlook. Tariffs. New tariffs being discussed in Washington could set off a chain reaction, one that spirals into collapsing markets, mass layoffs, and frozen credit lines, all within 6 months. Stay with me, because once you see how fragile America's financial system really is, you'll understand why this isn't just a warning, it's a countdown. On the surface, the U.S. economy looks healthy. GDP grew 2.5% last quarter. Unemployment sits comfortably at 3.9%. Inflation cooled to just 2.1%. Politicians are claiming victory. Wall Street is celebrating record highs. But beneath the glossy headlines, a dangerous truth is hiding. The system is weaker than it looks. Let's pull back the curtain. Household debt just crossed $17.5 trillion, the highest in U.S. history. Credit card delinquencies are at their highest level. Since 2010, banks are sitting on $500 billion in unrealized losses from long-term bonds. Corporate America is drowning in $12 trillion of debt, much of it due within the next 3 years. This is not stability. This is fragility disguised as strength. America's financial system has been stretched to its limit, and tariffs, they could be the straw that breaks its back. So, what exactly is coming? Washington is debating 3 major tariff packages. 1. 25% tariffs on Chinese electronics and manufactured goods. 2. 20% tariffs on European cars and auto parts. 3. Potential retaliatory tariffs on U.S. agricultural exports. On paper, tariffs are designed to protect American jobs. In reality, they're a hidden tax, one that lands hardest on consumers, businesses, and investors. Let me break it down. Your next iPhone, $120 more expensive, overnight. Your next car, $4,500 more. Your grocery bill, up 15% if China retaliates on U.S. soy and grain exports. And it doesn't stop there. When companies pay more for imports, their profits shrink. When profits shrink, stock prices fall. When stock prices fall, investors panic. And when investors panic, the entire financial system starts to crack. Markets hate uncertainty more than anything, and tariffs create chaos. Remember 2018, a small trade war between the US and China sent the S&P 500 tumbling nearly 19% in just 3 months. That was when corporate debt was lower, interest rates were stable, and household balance sheets were healthier. Fast forward to 2025, corporate debt is double what it was back then. Market leverage has tripled. Retail investors are pouring into risky bets at historic levels. This isn't just a warning, it's a ticking time bomb. If tariffs hit, the sequence could look like this. 1. Tariffs announced gives stocks plunge overnight. 2. Earnings collapse gives companies slash jobs and investments. 3. Consumer spending dries up gives GDP slows sharply. 4. Credit markets tighten gives banks pull back lending. 5. Confidence evaporates gives panic spreads worldwide. This domino effect could turn a trade dispute into a full-scale financial crisis. And it wouldn't take years, it could unfold in months. Normally, when the economy slows, the Federal Reserve has tools to stabilize the system. But this time, the Fed faces an impossible choice. If tariffs cause prices to skyrocket, the Fed would need to raise interest rates aggressively to fight inflation. But raising rates would also choke off growth, crash housing markets, and deepen a recession. On the other hand, if the Fed cuts rates to save growth, the dollar weakens. Imports get even more expensive, and inflation spirals out of control. It's what economists call a policy trap, a lose-lose situation where every move has consequences. And here's the kicker. America has never faced this combination of high debt, fragile banks, and massive trade disruptions at the same time. This isn't just a financial problem anymore. It's a confidence problem. And when trust disappears, markets move faster than ever. Tariffs aren't one-sided. Every time the U.S. strikes, the world hits back. China retaliates with tariffs on U.S. agriculture and manufacturing. Europe responds with levies on American tech, pharmaceuticals, and aerospace. Southeast Asia reroutes supply chains away from U.S. firms entirely. The ripple effects are brutal. Boeing loses global orders. Apple faces collapsing overseas sales. Us farmers see exports dry up overnight. And here's the hidden danger. Foreign governments also control America's lifeline of debt. Every year, the U.S. borrows trillions by selling treasury bonds. China, Japan, and Europe are among the biggest buyers. But what happens if trade wars, sour relationships, and foreign demand for U.S. debt dries up? The U.S. Treasury would be forced to raise interest rates to attract buyers. Higher interest rates make mortgages, loans, and credit cards more expensive. That squeezes households, businesses, and banks all at once. It's a feedback loop that turns tariffs into a global financial hurricane. Here's the scary part. The system doesn't need a massive shock to break. All it takes is one small spark. Why? Because America's financial system is already loaded with hidden fragility. Shadow banking. Trillions in unregulated private loans that nobody's tracking. Overleveraged hedge funds. Borrowing huge sums to chase risky bets. Commercial real estate. Collapsing property values, threatening small and mid-sized banks. Record consumer debt. Millions of households living paycheck to paycheck. One price hike away from default. When tariffs raise costs, margins, and interest rates simultaneously. The pressure could trigger cascading defaults across sectors. And history shows us one thing. Financial crashes start with a loud bang. They start quietly. Then suddenly, they spiral out of control. Analysts are warning. If the current tariff plans move forward, the real impact begins within 6 months. Month 1, tariffs are announced. Markets spike downward. Volatility explodes. Month 2, import prices climb. Companies issue profit warnings. Month 3, layoffs begin as businesses slash costs. Consumer confidence erodes. Month 4, credit markets tighten. Banks limit loans. Housing starts fall. Month 5, investors flee risk assets. Stocks enter freefall. Month 6, confidence collapses. Panic spreads globally. A recession officially begins. 6 months. That's how quickly the dominoes can fall. America's financial system looks strong from the outside, but inside, it's fragile, over-leveraged, and dangerously exposed. Tariffs aren't just taxes. They're accelerants, and they could light the fuse on a historic financial collapse. 6 months from now, we'll either look back on this moment as the Great Tariff Scare, or remember it as the beginning of the next big crash. The countdown has already begun. This isn't fear-mongering, it's preparation. The next 6 months could reshape the global economy, and you need to be ready. Subscribe, stay informed, and don't get caught off guard.